We have the pleasure to sit down with Farshid, a professional mortgage broker, to discuss about the mortgage situation and current challenges. Farshid, many people think there is a big difference between A lenders and B lenders, private lenders. Can you tell us more about that?
Of course, absolutely. That's actually my passionate topic. So you've got the big banks, the major five, major six nowadays. These are your main banks where you can actually open an account. So you can have investments, you can get credit cards and whatnot. Now they have a very specific box where every client either fits in that box or doesn't. And if you don't fit in that box, basically you're the client. Now you have the monolines that come into play. The monoline lenders are basically the transition between the A lenders and B lenders. They're a lot more flexible, a lot more documents that the average bank does not accept, and they show more flexibility in terms of approval. Now the monolines also have a B side, which are known as the B lender, and they even offer more flexibility both in terms of income, in terms of the total debt that you can carry, and also your credit score. And then ultimately, if you don't fit in a B lender box, then we can move you into a private lender box. Now, private lenders have the ultimate flexibility. Doesn't mean that everybody is approved with the private lenders. Private lenders, most reputable private lenders, have their own underwriting practices, but also they give you a lot more flexibility in terms of documents that you can show or not show, in terms of credit score. And they're also very versatile in different products that they offer.
As your perspective, what are the current challenges in the market?
Basically, when we talk about condos, you have two major buyer groups. One of them are the first-time home buyers, and the second biggest buyer group were investors. With the first category, where they're first-time home buyers, the biggest challenge we had up until now were affordability. It was getting them approved because the income to value ratio was very low, and we had a very tough time getting people approved through major lenders. The other challenge that we had were the appraisals and the purchase value prices and the amount of down payment that were not kind of matching with what the banks were requiring. But with the second group, which I believe were the major drivers in the condo market, were the investors. The investors, generally what they are looking for is to rent out the property that they invest in. And when the rent does not cover the amount of mortgage that they have to pay, that rent to value ratio is not there, and they always pull their money out where they're actually losing money. Now, with the interest rates coming down, what we're seeing right now is a lot more investors coming into the market. The prices for condos are actually very favorable for investors, and you see a lot more people getting attracted into investing in condos for rental purposes.
What are the tips you have for pre-construction condo buyers?
The tips. First off, try not to change jobs. Monitor your credit score very closely, and manage your debt as much as possible. And call a mortgage broker early on in the process so we can guide you and make you ready for that final approval.
What is the main difference between fixed and variable rate as well as adjustable?
In a fixed rate environment, your payments do not change, and you will have the advantage of budgeting. So basically, you can budget your payments for a foreseeable future, whether it's 3 years, 4 years, 5 years, what have you. And that gives you stability and budgeting power. But you will not take advantage of drop in the interest rates. We have two types of variable rates. You have the variable and you have the adjustable. As overnight rate by Bank of Canada is announced periodically, when the rates change, your rate, which is a factor of the prime rate plus or minus a discount rate, that affects how your payment is calculated. Now, with the adjustable, your payments change as the prime rate overnight rate changes, but your amortization will remain the same, and it will continue on because your total amount of payment will change according to the prime rate. Well, with the variable rate, your payments will remain the same, but a larger portion or a smaller portion of each payment goes towards the interest or principal. Therefore, your amortization can increase based on market conditions. Your amortization can increase based on the variable rate, or therefore your amortization can change depending on whether the interest rates are decreasing or increasing, but your payments will remain the same. That's why in the past few years, when the interest rates were on the rise, we would see a lot of people with 45, 50 years, 60 years amortization, but their payments would stay the same. And that would remain the same until it hits a trigger point at where the bank calls you in and says, let's renegotiate a new deal.
Many people might have this question in terms of purchasing the pre-con. How long do they have to do the hold for the rate?
So most major banks have a 120-day maximum rate hold, which is your pre-approval expiry date. There are only a very few banks that will give you longer rate holds than that. Now, the rate hold is amazing when the interest rates are on the rise, but when the rates are decreasing, rate hold doesn't really mean anything.
For purchasers who have their occupancy in 2025, end of 2025, when do you recommend them to come and apply for the mortgage?
Once they are issued an occupancy rate, that's when we have to apply for the mortgage. But the actual process needs to start well before then, where we can prepare the documents, where we can prepare what is needed to actually apply for the mortgage. So to answer your question, I would say the process needs to start as soon as possible, but the actual application is when you have the occupancy notice.
Some people have that in mind, that they think the interest rate coming down in 2025, so they're going to wait for it. Would you recommend that?
As interest rates come down, there is going to be more buyers in the market. And in any kind of market which is dictated, which prices are dictated based on supply and demand, where there is higher demand and there is similar amount of supply, the prices logically will increase. So if you wait to purchase a property when there is a lower interest rate, obviously there's going to be more buyers in the market and there's going to be more people that want to purchase that property. So the prices will increase. What I do recommend to those people is, if you can qualify, apply for a variable rate mortgage, and next year, or when the interest rates actually bottom out, then you can convert it into a fixed rate and enjoy the property that you purchased at a very low price with the lowest interest rate possible. How do you see 2025 and beyond?
I believe with interest rates coming down, early 2025, we're going to see more transactions in real estate market, as well as the situation between the United States and Canada. That depends in terms of the rate of inflation. So the banks might not be able to decrease the rate fast enough. But end of 2025, early 2026, I believe we're going to have a hot market starting. Fixed or variable?
If you can afford it, variable.
A lender or B lender?
Depends on your condition.
Bank or monoline?
I would say monoline. Condo or freehold?
Depends on the market.
House or apartment?
Apartment.
City or suburbs?
City.
Pre-con or assignment?
Today, assignment. Farshid, thank you so much. It was a fantastic discussion, and looking forward to the next one.
Looking forward to it. Thank you so much for having me. Appreciate the time. Pleasure.